Most people think buying a rental property is an investment, and that's where they get tripped up. They go into it expecting something passive, and instead, it feels way more hands-on, way more work than they were prepared for. Here's the truth. Owning rental properties isn't really investing. It's running a business, and nobody starts a business expecting it to be passive. People understand from day one that it's going to take effort up front. Once you look at rental properties through that lens, everything changes. Because businesses operate differently than investments. They take work early on, but they also produce much higher returns. That's what most people miss. Today, I want to break down what most people get wrong about rental property investing, why rental properties can produce higher returns than stocks or index funds, and how my wife and I used the rental business to reach financial freedom in just 3 years. Not by waiting, not by hoping the market cooperated, but by building something intentionally. Stay with me because in a moment, I'll walk you through the mindset shift that turns rentals from too much work into a system you can build, optimize, and eventually step back from. Let's start with how most people think about investing, because this is where the confusion begins. When people say they're investing, most of the time, it's pretty basic. They're buying things like index funds or contributing to retirement accounts. It's all very passive, the kind of investing you can set up once and mostly forget about. Some people get a little bit more adventurous. They pick individual stocks. Maybe they dabble in crypto, or they invest in things like real estate syndications. But at the end of the day, all of these work the same way. You put your money in, you step back, and you let the market do its thing. Over long periods, a typical outcome might be 6 to 8% a year in returns. And if you're lucky, maybe 10 to 15%. And that's fine if your goal is slow, passive growth over decades. But here's the key distinction most people never make. Passive investing is designed to grow your wealth gradually. A business works on a completely different model. A business creates income, it uses systems, it uses leverage, and it rewards effort, skill, and decision-making. Rental properties fall into this category. They're not passive investments. They're income-producing businesses built on real assets. And that's exactly why the returns can be higher and why the time it takes to build wealth can be much shorter. This is where people tend to get tripped up. They evaluate rental properties with an investor's expectations, and then they're surprised when the experience feels more hands-on than they expected. But nothing's actually wrong. They're just looking at it through the wrong lens. In the next section, I want to address the most common complaint I hear about rental properties. One of the biggest things people say is, it's just too much work. This doesn't feel passive at all. And you know what? That's true, especially in the beginning. Rental properties aren't passive investments. They're businesses, and businesses take effort early on. They require setup, systems, and decisions. Nobody starts a business expecting to be hands-off from day one. They expect it's going to take effort, and that expectation's already built in. But when people approach rental properties like stocks, expecting minimal involvement, the mismatch creates frustration. They think something's wrong. The issue isn't the work, it's the expectation. Here's the part most people completely miss. The effort you put in is exactly why the returns can be so much higher. You don't get business-level returns with investor-level involvement. I'll break down the numbers in the next section, but the short version is this. Higher involvement upfront creates upside that passive investing simply doesn't. Now, this doesn't mean you're signing up for a lifetime of fixing toilets or answering tenant calls at midnight. That's another misconception. Rental businesses can become very passive once they're structured properly. That's what property managers are for. That's what systems and automation does for you. Just like a CEO doesn't stock shelves or answer phones forever, a rental business owner doesn't handle day-to-day operations forever. You build it intentionally, with the goal that over time, it runs without you. And when you understand that, the entire experience changes. In the next section, I want to show you why the economics work so differently and why that extra effort up front is often worth years, even decades of time on the back end. I want to highlight something I just said now. Higher involvement up front creates upside that passive investing simply doesn't. Now I want to explain why that's true. At the most basic level, this comes down to one distinction most people never think about, but it's a really simple truth. Business owners make more money than passive investors. When you buy a stock, you're a passive investor. You own shares, but you don't control the business. The people who run the company, the owners, capture most of the upside. That's not a flaw in the system. That's just how the system is designed. Rental properties work the same way. When you own rental properties, you're not just investing in real estate. You're stepping into the role of a business owner. And that changes the economics completely because business owners don't rely on just one thing going right. They have multiple ways to create value at the same time. With a rental business, those value drivers include cash flow from operations, appreciation over time, forced appreciation through renovations and operational improvements, debt paydown using someone else's money, tax advantages similar to how businesses deduct equipment or use bonus depreciation, and leverage, which amplifies everything when used responsibly. That's fundamentally different than passive investing. That's why comparing rental properties to stocks misses the point. You're not comparing two investments, you're comparing an investor to an owner. A 10 to 15% return in the stock market can look great on paper, but it's still slow and it's mostly linear. You put money in, and then you wait. A well-run rental business doesn't work that way. You can recapture large portions of your invested capital early, reinvest profits intentionally, use equity to grow faster, scale when the numbers make sense. When you do that, you're no longer waiting decades for compounding to do the heavy lifting. You're actively compressing the timeline. And that's exactly what we did. And in the next part, I'll walk you through a real example from our rental business so you can see what this looks like in practice. One of the biggest advantages of building wealth through a business is speed. You're not waiting on the market. You're not hoping appreciation shows up on its own. You're actively creating value. For us, the single biggest driver of wealth creation was forced appreciation, improving the business, increasing its value, and then using that equity to grow faster. Let me give you a simple example from early in our investing journey. We bought a property for about $140,000, which was about $20,000 less than it was worth. So we had instant equity in the property. Then we made some very straightforward changes. We added bedrooms and bathrooms in the basement, nothing fancy, no luxury finishes. We just made the property more functional and therefore more valuable. A few years later, we sold that same property for about $410,000, nearly 3 times what we paid. But here's the part that made the biggest difference. We didn't take that profit and sit on it. We didn't move it into stocks and wait. We used the equity from that one deal to buy a 16-unit property worth around $2 million. That's what businesses let you do. You don't have to wait decades for growth to compound. You can create value, realize it, and redeploy it intentionally. And forced appreciation is only one part of the equation. The tax side is a complete game changer. Because unlike most investments, a rental business lets you reach outside the business itself and shelter income that has nothing to do with that property. Being able to use depreciation to offset W-2 or 1099 income changes the math entirely, especially for high-income earners. When you combine value creation, leverage, and tax savings, the timeline compresses fast. That's how my wife and I achieved financial freedom in just 3 years. Not by waiting, not by hoping, but by building deliberately. Once you understand where the speed comes from, the real question becomes, what are you giving up in exchange? This is the part most people never frame correctly. The real risk isn't building a business. The real risk is choosing a path where everything takes decades, even when it doesn't have to. If my wife and I had stayed safe, if we had stuck strictly to passive investing and preserving our wealth, nothing would have changed. We would have kept trading time for money. And the moment we stopped working, the income would have stopped too. That's the part people don't think through. Building a rental business did mean more involvement up front. There's no denying that. But that involvement brought us something incredibly valuable: speed. And that's the real trade-off. You're not choosing between effort and no effort. You're choosing between effort now or time forever. Because once the business is built, once it's structured properly, it doesn't require the same level of involvement. Just like any other well-run business, that's how we created time freedom. That's how we compressed the timeline. That's what business ownership makes possible. If you've ever felt frustrated that real estate takes too much work, this is why. You were measuring it like an investment when it should have been measured like a business. Now let's bring this home, because understanding this only matters if it changes what you do next. If you've ever felt frustrated with real estate or confused about why it feels like more work than you expected, now you know why. It's not an investment, it's a business. And businesses, when they're built intentionally, are one of the most powerful ways to create real wealth. If you want to learn how to build a rental business the right way, how to create value instead of hoping for appreciation, how to scale intentionally, and how to design it so it doesn't require your constant involvement, we offer a free strategy call with our team. There's no pressure, no sales pitch, but you will get clarity and a plan. If you're ready to stop thinking like a passive investor and start thinking like a business owner, click the link below and book a call. The biggest mistake isn't thinking rental properties take work. It's waiting years to realize that the work is exactly what creates the opportunity to achieve freedom quickly. Thanks for watching, and I'll see you in the next one.